Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Monday, August 8th, 2022. Sorry about missing last night's report. I actually got stuck in Chicago and didn't get home until close to 1:30 in the morning. But in any case, with this, things are we saw the Bulls try to gap the market open some 29 points, made it right into the where I'd put the 41.85 level was where I thought that the resellers would be waiting. And from there, we saw up 25 to down 10, and we ended up just closing down 5. So for the most part, I'm going to say that's a win for the Bears on that. And but really, the fractal pattern that I'm following right now it really is playing out. Exactly how this was, where we came up, came down, we didn't the Bears weren't able to break it through the 50-day moving average, came back up again. This is where we hit that resistance, came back down, and from here you could see we had the the 50-day moving average hold again, and then we came back up before we collapsed. So here you can see it's kind of the same thing, and like I said, it's not going to follow exactly. It's going to mimic it, and it is mimicking what's going on. So the Bears really need to get priced below the 41.05. If they do that, that's where I believe the next step's coming down to the 40, right around the 44,000, or possibly even a little bit lower than that, coming down to close the gap at the 39.24. If the Bulls can get above the 41.82. This is really, where if they're able to clear this resistance, there's not a whole lot that's going on until we get up to the 4300. But you can see right here, momentum, everything is just moving in an opposite direction. The only thing that would, because this is where the short position was initiated, and right now we're kind of just watching and seeing if it gets through. But the one thing is, you can see that the Bulls have burned off. The Bulls have burned off the overbought levels, and we're getting in. I'm saying the overbought, and we're getting into the oversold. But they're coming with these bearish divergences. So typically, when we have the bearish divergences, we're looking for a 100-point move to the downside. If we get a move down somewhere into this this support right here at the 40.88 or 40.80, this will fulfill really the backing and filling that position. But we have some important numbers coming out today. So I meant not today, this week. But I think a lot of traders are just kind of jockeying back around until those numbers come out. CPI, I believe, is on Wednesday, and then from there we have the PPI. So I don't believe inflation is topped yet. I still think there's another round of it coming. But right now, there's a little pause in it. So the Bulls, they need to get it above today's highs, 41.85. Bears, they really, first thing they need to do is get it through this the 41.15 level. But more importantly, if they can get it below this 40.80, that's where we should see a quick move down somewhere into the 40.004. So that would be the downside target. If the Bulls win, then there's a chance they're going up to the 4,300. We have to just kind of wait and see. But like I said, the divergences on the 60-minute chart is suggesting that they're not going to have enough juice to get up here. But if they do, and it's supposedly, there's a shock with the CPI that's more bullish, maybe that's how they do it. They gap it above. But like I said, this is suggesting that the next move is going to be to the downside, and we're still in trade mode. So once we get down to this 40.15, anywhere in this level, this is where we really want to close this trade. So let's do this. Let's just see what plays out tomorrow. Resistance is holding, support is holding. So until we break out of this little cluster mess, just leave the door open for a move in either direction. But the technicals are with the divergences are suggesting that the next move is going to be to the downside. So with that, have a great night, and I'll talk to you guys in the morning.